Okay, let's talk about loan modifications. So loan modifications are a great option as well if you can work this out with your lender to say, hey, you know what, look, everybody knows that we had the pandemic and everybody had a hard time. Can we modify the loan in a way where we can continue to stay in the house and keep making our payments moving forward, or modify the payments somehow? And the loan modification can show up in a few different ways. So it could extend the loan period. So a lot of lenders, what they were doing was they were taking the 30-year loan and they were extending it out to 40 years, re-amortizing, which was bringing the payment down so that your payments were less. And this way it made it more affordable for you to stay in your home, although it being now a longer period of time to do that. And, you know, I always tell people, if you can, pay off as much as you can, as quick as you can. But that's another video. It can be in the form of a second lien, right? So again, if you, like, let's say, for example, you did do a forbearance or something like that, and now you've come out of the forbearance or the redemption period, and you said, I still just can't make that payment. Can we do a loan modification? They could say, okay, fine. We're going to take all that money that we put as a forbearance and put it as a second lien on the property. And maybe they put terms on there where you got to make payments on that at a certain point in time, or currently, or you don't have to. It's just a lien that's sitting there. The problem with this is it does a couple of things. Number one, it potentially puts the value of your property now upside down. It also continues to accrue interest. It's not, I don't know any banks who are so, kind as to choose not to charge interest, on any money that they lend you. So that could be, that could be a factor. But if it's your only option, then I guess it's better than, getting foreclosed on and losing the house altogether. Or as a loan modification, they could lower the interest rates, or they can also eliminate a portion of the outstanding debt. Now, just be aware that when you do some things like this sometimes, and talk to a tax professional about this, we're not tax professionals, but sometimes what will happen is you will get that modification, that adjustment made, only to get a 1099 at the end of the year, saying that you've basically earned ordinary income. So I'll give you an example. Had a client, we were working with them, and yes, they got debt waived off of their loan. It was amazing. It was something like $150,000 that the lender said, fine, we're forgiving this amount of the debt. And then he got a 1099 saying that he had, ordinary income of $150,000. And his tax bill for that was, he had to pay taxes on that. So this is something you have to take into consideration. But again, we're in a mode right now. You got to notice a default. You got to notice a trustee sale. If this is the option that works for you, well, then this is the option to work for you, and figure out the rest of it a little bit later, because once you get your payments current again, your credit's back in the right shape, well, then perhaps you can refinance everything back into a 30-year loan, and with a reasonable payment, and get rid of any of those potential issues that could come up as a result of it. But loan modification is definitely an option if you have not already explored that option.